How to find good entry points, that's what I want to walk you through in this video. So if you are a day trader and you're looking to try to improve or just figure out how do I get good entry points, I want to walk you through one way that you can do that, and a way in which I would argue needs to be done, because when you take a multiple angle look, as I'm about to show you, that is going to help put yourself in the best possible spot. Now, of course, there's no holy grail, there's no magic pill. Nobody is always going to be right. Not every entry point is going to be good. But the core goal for us as day traders is to put ourselves in entry points where we have some kind of edge. And that's what it's all about. Gaining an edge, trying to find pieces of evidence that could suggest that there's an edge involved with an entry point. And as I mentioned, I want to walk you through a trade that I took. That way you can see all this play out in the real world. Nothing theoretical here like a book, like, well, yeah, this is how it's supposed to happen, and they show you some beautiful picture and everything. No, this is a real world trade that I caught live on video, and I just want to walk you through why I like the location where I got entered. So let's just first start with a basic premise that moving averages can make good entry points. Because if you use them as a support or a resistance, that in of itself gives you at least a little bit of an idea of, okay, maybe, just maybe, this could be an area of resistance or this could be an area of support. Now, in the example I'm about to show you, I was looking at it from more of an area of resistance because I wanted to see the price go down as I was looking to play a put contract, which is options. But just to set all that aside, a put contract just means if the price goes down, I will make money. So I'm looking for areas of resistance. And on my chart, the 50-period moving average is represented right there by that purple line. Now, the thing right now is there is no data. There's no suggestion that this is actually any sort of area of resistance. I mean, you could maybe argue right there it was rejected from it, but I think that's a bit of a stretch. So as of now, on this day, there's just no evidence that that 50-period moving average will indeed be resistance. But to reiterate, the 50-period moving average is one of those levels that a lot of people use it. So even if you just want to argue it's a simple self-fulfilling prophecy, fine, fair enough. But you've just admitted that there is a self-fulfilling prophecy. So there's an idea to think that, okay, yeah, that could be a self-fulfilling prophecy, but is there anything else that could gain and give me a little bit more credibility, a little bit more evidence that this area is indeed going to behave as a resistance? And this is where the multiple angles come in to play. So the first angle is in regard to the time frames. Right here, the 1 minute time frame. What does that actually mean? Well, that means that each one of these candlesticks, that's what these are called, candlesticks, represents 1 minute's worth of time. So after 60 seconds passes, a whole new candlestick begins to form. So again, each one of those represents 1 minute. And as you just saw previously, once again, there is that purple line there, the 50-period moving average. But as discussed, it's still a big question mark, okay? Well, is the price going to respect this level today? Is it not? Is there anything else that we can look at? And yes, there is. The other angle is another time frame. So we just looked at the 1 minute, but you can go out there and do unlimited amount of time frames. Now, I don't recommend that because that's going to overwhelm yourself. But what I do recommend is what's known as multiple time frame analysis. Now, maybe that sounds like you're about to launch a rocket into space, but it doesn't need to be that complicated. Is it the most, straightforward thing? No, it's definitely going to take some practice. It's going to take, some effort on your part. But when you can start to look at other angles, other time frames, you can start to give yourself more, insight into things and gain those pieces of evidence. So what I like to use is the 1 minute time frame, which I should note for those of you that watch my live trade videos, that's what you see is the 1 minute time frame. But please understand that I'm looking at other time frames on other monitors that you don't see, which is why I always quiver when people are like, hey Clay, I've been watching your live trade videos. I understand your strategy. It's like, no, you definitely don't, because you see such a small fraction of what I'm looking at. So kind of a small side note there. But I like to use the 1 minute, and then I'll also use the 5 minute. So now let's look at this other angle. Let's look at the 5 minute time frame and see if it can shed any more light into whether or not this 1 minute area might be a good entry point. So here we are looking at the 5 minute time frame, a whole nother angle, and you can see, or maybe not see, but I'm going to point out to you, we have some interesting dynamics here playing out, specifically in regards to some of these other moving averages that I like to use. Right there, that greenish line being the 8 SMA, and then that pink line there being the 200 SMA. And maybe you see it now, but check out what has been occurring. The price has already been rejected once by that pink line there, and the price is sitting right below both of these moving averages. So does that guarantee anything? Absolutely not. But when you sit here and say, wow, the 5 minute time frame, the price is sitting right below a couple of key moving averages, one with the downward slope to it, the 8 SMA, and then the 200 period, which has already had a failed breakout there and it's been immediately rejected. And then you look at the other angle, again, the other angle being the 1 minute time frame, and you see that, okay, this is now approaching this purple line. Maybe, just maybe, I could see that purple line actually providing some area of resistance. So we've established our trade idea, our kind of, okay, yeah, I think this could work on the 1 minute time frame, but because we want other angles, we've now introduced the 5 minute time frame, and we've kind of cross-referenced them and see, is there any sort of meshing? Do they help each other out? Does it make the picture more complicated? And that sometimes happens. It's like, ooh, I don't know, that this thing, it's getting confusing now because you kind of have conflicting messages. But that was not the case there. It was good, nice meshing where the 5 minute presented that additional data to help suggest that, yeah, this 1 minute entry point could very well work out. So let's see how the trade ultimately played out. Before we get to my trade, as I mentioned earlier, I am doing options here. And if you know nothing about options and you want to learn more, just comment below option guide and I will link you to this totally free class I put together called The Big Basics of Day Trading Options. Now, the main thing to watch here is how the candlestick here behaves. Is it going to stay down below that purple line? Is it going to bust out through there? That would be bad because, again, I want to see the price go down. I want to see, my idea is that this is an area of resistance. So I want to see some red show up after I get done. So this is going to be what you'll want to mainly watch. But then also, as far as the screen is concerned, this is going to turn from white to green. When that occurs, that means I have been able to buy the option contract. You'll see a secondary white line show up here. That means I'm trying to sell. And when that turns from white to green, that means I have been able to sell. And then over here is where you'll see the profits, and losses fluctuate back and forth as I'm in the position. So just kind of a quick little heads up there in regards to how this is all working. But let's get this trade underway. So you can see that's green. I am now in the trade. This is fluctuating around. But again, what's going to happen here? Is the price going to bust up through there? Is it going to come down? So that's what's needs to be watched. See, it's coming red. Very good. Coming down red. And I was able to sell. So that did indeed behave as resistance. It rejected the price down. Now, it never hit it exactly, but around the general vicinity behaved as resistance. You can see got a nice red candle, which was what I wanted. And then you can see when I was able to sell, that put $1,000 in my pocket. And just show you how crazy options can be. That was $1,000. And if you do the math right there, which is showing the timestamps, $1,000 in 19 seconds. Now, I personally did not do this on this exact day, but this is where we can now start to transition into the next phases of finding good entry points. And that is this. We now officially have more confirmation that the 1 minute time frame, that 50 period moving average, the purple line, is indeed acting as a resistance. The price is indeed respecting it as a resistance. So moving forward, you can start to have a whole lot more, confidence that that level will indeed continue to act as resistance. Now, of course, that's not guaranteed to be the case, and that's why risk management matters. But we have additional confirmation from the 1 minute itself. Remember, the first time was, well, we had to go find other angles to figure something out. But now the 1 minute itself is telling us, hey, this could be an area of resistance. Now, of course, you can still use those other angles. But my point here is that first phase was trying to gain evidence from other time frames, but now the time frame itself is telling us, hey, yeah, the 50 period moving average is indeed behaving as resistance. So let's see how this played out a couple more instances. So again, this is where I got out for that $1,000, but it's embarrassing to show this, but that's all hindsight. Had I held on, that could have very realistically been a $5,000, $6,000 trade, because check it out, the price just totally collapsed. Unfortunately, though, at least as far as I'm aware, there's no way to ever know when that amount of a collapse is going to occur. Sometimes you're in the right spot at the right time, and I just decided to pick a strategy that was more so a quick little scalp, which again, I'm not complaining about $1,000 in 19 seconds. I'm just saying, yeah, that purple line area certainly did behave as a resistance, but let's just keep our eye on that purple line as time goes by. So again, as the price comes up here, it would be very logical to say, okay, the price may be retesting this level. It's behaved as resistance before. So you could figure out and say, you know what, I think that might make another good entry point. And check that out. The power of charts. Price came right up there and rejected right back off of that level. Absolutely beautiful. Nice move down. That would have been very nice move. Now, not as nice as that one. And then check it out. It comes back up here again. Now it does go slightly above it, but that's why you gotta always give things a little bit of wiggle room. But now the question is, will it get rejected again? Is this gonna act as resistance for a third time? And you can see right there, again, check out that move. Would have been another beautiful move. And then the price comes up here, and in this situation, it does not work. It breaks up through there. So yes, this one right here, this entry point would have been a losing trade, but goes back to, okay, let's just, for example's sake, if all if all four of these instances, 1, 2, 3, 4 were taken, you are at a 75% win rate. And assuming you're going to be disciplined, this is a very disciplined, modest loss. And then you had a couple of potentially really big wins. But at the end of the day, by using that 50 period moving average, you would have been at a 75% win rate, which was again established right here by using those other time frames. So good entry points are not just as simple as, oh, it's a moving average, it'll for sure act as resistance or support, as you've seen here. No, you got to dig a little bit deeper. You got to see if there's other bits of evidence. But then after you start to get that evidence and you start to build more evidence within the time frame itself, then yeah, it can in many ways be as simple as, hey, look, there's that purple line again. It's made a good entry point so far. Let's see what happens again. So that is where things need to start. Come up with a basic idea, look for pieces of evidence with that multiple time frame analysis, and once the evidence builds, you can gain more insight and confidence into certain areas that may or may not be working in terms of entry points, whether that's from resistance or support side of things. So I hope this helps. If there are any other questions like that you've seen here, please leave those down below. And also, if you enjoy these and you want me to continue to make this sort of content, a super easy way to communicate that is twofold. Hit the like button and then hit the subscribe button. If you're like, Clay, I don't have much money, but I do appreciate your content. How can I help support the channel? Hit the subscribe button. That really goes a long way and truly helps out. So if you could do that, I really do thank you. So I hope this helps. I hope this can help you get your mindset in a way of how you can find those good entry points as a day trader. And again, please let me know if you have any questions. Thanks for watching. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.